launching Audacity. And before we start, I'm going to grab a glass of vodka. Be right back. Yeah. Priorities. You and I talked about Ripple this morning, and I was like, I think I almost want to buy more Ripple, even though I'm not a big fan. And you were like, dude, I didn't like Ripple when I bought Ripple. Now, when I told you this morning, until right before this video, it was up 30%. But all right. Well, hello everybody, and welcome to Crypto Sanity. I am Aaron Hedrick, and with me, as always, is Keith Mukai. How you doing, Keith?
I'm all right. A little frustrated with the market. So I'm trying to follow that idea, buy the dip, buy when it's cheap. So I scraped together some extra fiat that I could put into the market and just put it into some Ethereum. And it was at a discount from its high, and I felt pretty good about it. But I'd say like by the end of the day, it kept dropping and
Hmm.
I was
Yeah,
ended up
I've been
down.
there.
Yeah, yeah. And so like within the first day, I think I was down 20%,
Hmm.
which okay, whatever.
In crypto terms, that's not like the Dow Industrial Average, where you're like, if you go down 20% a day, chaos is ensuing.
Right, right.
But
Like civilization would break down if the Dow dropped 20% in a day.
yeah,
Um,
yeah.
but it pissed me off, and and it just reminded me over and over again, like you just can't precisely time the market. Like
Hmm.
you can buy in or sell on the general trend. Like, yeah, Ethereum is cheaper today than it was, 2, 3 weeks ago,
Hmm.
when it was peaking out.
I bought some then too, but yeah.
So I'm looking at the chart and just thinking like, man, you know, it was kind of dumb that I did this entire purchase all at once. It didn't occur to me until after I made the purchase to
Hmm.
spread it out. Why did I just place one bet at one point in time and take my chances? Like I wasn't in a rush. I was just buying in because it's an opportune time, but it's not like that was only a microsecond opportunity. The market's been down. I
Yeah,
I
but you know what?
wasn't
It
in a
feels like
rush.
that when you kind of see that. The market drops, and you're like, "Oh man, this is the lowest it's been in a while," and it'll burble along at the same thing, and you're like, "This seems pretty low," and then you'll buy in hard, and then you don't know what the market's going to be tomorrow, much less an hour from now.
Yeah, and so I it's not that I regretted the buy, I just regretted my strategy with it.
Hmm.
And so like I said, if I had spread out the buy over a couple hours or even a couple days, I mean, the opportunity still would have been there. It's not like the market's going to turn around tomorrow and shoot up 500% and, like, oh, I missed the boat. Damn, if only I'd pulled the trigger.
Yeah.
There's time. I mean, there'll be times where things are more dynamic and crazy, but for right now, the trend has been, like you said, burble along. I like that
Yeah.
phrase. I don't even think it's a word, but I like that. I like it. Uh,
Burbling.
it sounds
Burbling. I think
right.
it's a word now. If it's not a word, it's just burbling, burbling, burbling. But no,
um,
I've seen the same thing too, and it's like that's I guess one of the convenient things for stock market traders. They open and close the market. This is a 24/7 market, so this is something where you go to what the other night I looked and I was like, man, Ethereum's down at like $720, and I was like, I could buy some now, but I was like, let's see how it is tomorrow. I wake up the next day and it's like 8:30, and I'm like, damn it, and it hasn't gone back down to the 7:30 or 7:20 since. So of course, I get my whole FOMO. I should have bought then, but it it doesn't matter. You can't. You're right. You can't predict it. So when you think you can predict it and you make a purchase, I feel like 99% of the time you're going to be wrong.
yeah, yeah. So I started thinking what I could have done better, and like I said, spreading it out seems to make sense.
Hmm.
And so let's say I did a $1,000 purchase. Just making up numbers here.
Hmm.
So rather than just saying, okay, $1,000 right now, you know, let it ride, here we go. Uh, I should have just done, say, four $250 buys. And this is called dollar cost averaging. And,
Hmm.
the big version of it is for like your 401k. Every month,
Hmm.
a chunk of your salary goes into your 401k and it automatically buys more of whatever you've got it set up to do.
Yeah.
And you're not micromanaging it. You're not worrying about if the market is up or down. It's just every month more money goes into the 401k and it automatically buys more mutual funds or, ETFs or whatever you're in.
Yeah.
So in this case, the crypto market is so stupid volatile on a macro scale, like the whole market taking these huge swings, but even on a micro scale, even within the course of a day, you could see 10, 15, 20% swings.
Yeah.
And so by spacing out your bets, you're basically averaging away that short-term volatility.
Yeah.
So that 20% that I lost on Ethereum, if I had spaced it out, okay, maybe my first purchase was at, a kind of a relatively high level, but then the
Mm-hmm.
next one would have stepped down, and the next one stepped down, and then maybe the next one stepped back up. But the average would have cut through the middle of those guys. So some of those purchases will land on a valley, and it'll be a coincidental, opportune moment to buy, and some
Mm-hmm.
will hit on a peak or on the way up, and it'll be a slightly crappy time to buy. But the whole point is averaging.
Mm-hmm.
And once I started thinking about it, I'm like, yeah, like I think the market's going to be in this burble mode for a couple days or weeks or maybe even a couple months. So I should be spacing out my buys over that span of time. So
So you're averaging like basically what's going to go up and down in that time rather than maybe choosing hopefully luckily the best time or the lowest time. And I remember we briefly talked about this, just you and I together, and I was like, yeah, that sounds really smart. And I kind of did something similar, but not really, where I had my I had my USD, in the market, and I was like, okay, well, let me just do, this unit of purchase now. And I just kind of broke it up, and I was like, okay, well, how does everything look? Okay, well, oh, okay, it's going up. I'm gonna do another unit of purchase. Oh, okay, and then it's down below both of those. I'm gonna do another unit of purchase, and then it goes even lower, another unit of purchase. So I was kind of doing it, but not in regular intervals like you were, I think, timing it to be. But then my very last bit, I had a decent chunk of change left, and I was like, I think it's going up right now. So I was like, just boom, get it
slam
in
it.
there. Yeah, did it.
Like we're talking about, short-term effects. So yeah, 20% give or take in the crypto world is just a good or a bad day. It's not a huge deal. Um, but I'm just trying to give myself like the starting point advantage.
Hmm.
Like I just put new money in. I don't want to start at negative 20% on day one of my new money, damn it.
Yeah. And I
Um,
mean, that's kind of the thing is like people think now is the time. Or I even get friends that ask me, like, oh, what should I do? Should I buy like 5,000 of this right now? And I'm like, well, you watch the market and you should get in, but you need to hedge your bets and diversify and all that stuff. So it becomes a long conversation.
yeah, but
Uh,
see
yeah.
now what I would tell them is if you want to buy 5,000 in and whatever allocation of that is to, let's say, Ethereum, say
Hmm.
2,000 of it, then I would tell them, all right, start by buying $100 a day. And
Hmm.
if you're really disciplined, do it every day at noon on your lunch break. Buy
Mm.
$100. Don't worry about where the market's at. Just buy the $100 and see where you're at tomorrow. Buy another
Hmm.
$100. Keep going, keep going, keep going. Now, what you would really do is you would set. Well, there's two ways to do this. So normally you would just set your buy price,
Hmm.
and you would set
Your
it.
limit.
Yeah,
Yeah.
you would set it a little bit below the current market value, or if you think it's going to come back down to some target, okay, you do that. But again, that takes you knowing, predicting what the market is going to do, predicting how much it's going to fall. Like you could set your buy order just below market, it triggers, and then the market drops another 15%, and then you're just like, damn it, I didn't set my target low enough.
I've had that,
Right. So
yeah.
you're still in the game of trying to guess the market, or you see the market's going up and you say, oh, okay, it's a little too hot right now, I'm not going to put my money in.
Yeah.
And then it's 2 days later and it hasn't stopped going up, and you
Yeah.
missed that train because you didn't get
Yes.
on. So
That
that's the
is
whole
what
point.
happened to me when I first started playing. I put in a tiny little bit, and then I was like, "Oh man, it's getting too crazy. I'm gonna wait for it to drop." And then it went to the you know, that's when Bitcoin went from whatever it was, like 11,000 up to 20,000. Because I was like,
Hmm.
11,000. I bought in when it was 9,000, and I only bought a little bit. And then I was like, I'm gonna wait for that 11,000 to come down. And then I was like, whoa. I mean, who knows though? It's like, again, predictive market. Would I have known to sell at 20,000, or would I have been one of those people being like, it's gonna go to 200,000? And and that's the whole thing. But so I know that you mentioned you had created a solution specifically for this scenario of people who aren't free at noon every day.
Yeah,
So
yeah. So
elaborate, sir.
the problem with this is that it takes a lot of discipline to, because the tools just aren't there. The tools are set up to either do a market order right at the moment,
Hmm.
or to set your limit price for your buy. But there isn't really, and Coinbase does have some recurring buy, features, but then you're paying fees on those buys.
Yeah, F that.
But so GDEX has an API, and since I'm a programmer, um, and I was pissed off about losing that 20%, so I was motivated.
Yeah.
Uh, so I realized I can write a simple little purchasing bot that just runs on a schedule. It just wakes up and it just grabs the current price, puts in a buy order in a way that won't incur any GDAX fees, and completes that purchase for me on a regular schedule so that I don't have to think about it. And I set it up to email me. And
Hmm.
initially, I threw some money into the GDAX account, and I did the minimum possible buys through the API, which for Bitcoin and Ethereum is like right around eight or $7 or $8. So
So
like
what's the frequency you set on that?
so I was doing at first I was doing every 3 hours buy $7 of Ethereum or buy $7 of Bitcoin.
Okay.
And so once I got it running, I went to sleep. I woke up in the morning and I had 3 emails from the bot that
Yeah.
said, buy order completed. Um, and if you look at the price that those buy orders were completed at, it's all up and down and all over the place. And it I feel like it totally succeeded for me because the pattern of the pricing would have psyched me out. Like I would
Yeah.
have stopped buying at some of those prices, or I would have been, over eager to buy at certain prices. And instead, the bot just, as those prices were rolling around, like the bot buys, and you just get this average cost level.
Well, I think that's good for just for sanity in general, because as I always reiterate, we are not financial advisors. This is not financial advice. It is not investment advice. But what I will advise you is don't sit there and watch the trade screens because you will go crazy. I advise you on this. This is my recommendation. If you try to sit there and try to predict and try to day trade and trade in, trade out, and all this stuff, it can give you ulcers.
Yeah,
So don't do that.
yeah,
It is this set it and forget it mentality. It's like you make a buy, you make a purchase. If you're gonna do it, old school way like I do, or Keith has actually listed his bot on GitHub, so it is available. And he can put a link in the description, or at least explain where to find it if somebody wants to utilize it. But if you take your day and sit there in front of the computer and watch and try to be like, it's up, it's down, it's up, it's down, let's buy now, you will go crazy before
yeah,
you get rich.
yeah.
That's for sure. Or go broke. Either one. So
Right,
don't do that.
right, right.
Yeah.
But yeah, and so the more I've thought about this, just the more I love this concept. So, let's say you had $500 to invest this month, and you're going to put it into Ethereum or Bitcoin, whatever you want. And I think the market is going to be pretty flat for a while. So, I I don't really care when it buys in. I just wanted to keep going on a regular schedule. So basically, I'm just going to do the math. How many times can I divide up 500 by the minimum buy, which is,
Hmm.
about $7 or $8. I should have picked an easier number to divide by, but I think that ends up with like about 60 or so trades. Is that right?
Yeah.
So 60 trades
Maybe.
over.
I haven't done the math. Yeah. But yeah.
This is sad. 6 times 8 is 48. Yeah.
Yeah.
Okay. So
That was
60
the
trades.
rhyme. Yeah.
Um, 60 trades over the course of the month. So that's 2 trades per day. So do a trade every 12 hours. and you know, maybe the price of Ethereum is going to keep climbing over the course of this next month, um, but probably not. It's gonna have micro rises and drops, um, and yeah, just don't fret about it. Just let the bot do its thing. Every 12 hours, it just buys $8 more. And the beauty of such a small micro purchase is, who cares if you bought during like a bad spike? It's eight
Yeah.
bucks. You made a bad $8 bet. And
Yeah.
and if you happen to buy during a valley, it's not as satisfying either, but it's like, oh, good job, bot. You got our $8. You got a lot of value for our $8 on that hit.
Yeah, and this is one thing I'll also say is just kind of a caveat to all of this is like this kind of strategy of dollar cost averaging, using this bot, or even doing what I did, at least breaking up the purchases. I put in a chunk of money and at least break it up and purchase over time, even though I was trying to watch the markets and play them a little more. This all has to go in with the belief for people that they do believe in cryptocurrency. They
Yeah.
believe in what they're investing in, and if you don't believe in it, and I've seen this plenty of times and I happen to thoroughly agree with it. If somebody is in this space just to make money, you shouldn't be here. This is not a place just to get rich quick. Some people may, a lot of people won't. A lot of money's going to be lost in this space. A lot of money's going to be made in this space. But if people are there just to try to like buy in low and sell high, then I feel like you're going to try to predict something that's not really going to happen. So what Keith and I are both believing in, and I want to know what he's strategizing on, is yeah, you're buying in little chunks to try to find the average of wherever the market is and wherever the market's going. But this is not something we're expecting to turn around in 3 weeks or in 2 months. This is something that he's hoping to get in and watch this average, because we're thinking now is a certain point that will go higher and we're going to be better overall.
This strategy, and well, I mean, all of our strategies really are based on the belief that long term there's going to be more value here. So
Correct.
so that means, for the dollar cost averaging philosophy, I don't have to worry if I'm getting the best absolute possible deal this moment on Ethereum. Like, yeah, if I watch the market and I get really savvy about it, sure, I can manually make, you know, big baller purchases, when it goes down, and set up really amazing positions that way. But
Mm-hmm.
I don't care about this. The the ups and downs of the market today are chump change compared to what I think it'll be in the future. So I just want to keep
Correct.
buying in and give myself a reasonable, averaged, smoothed out advantage to just kind of calm down the daily volatility through dollar
Mm-hmm.
cost averaging, and just set myself up. And I should say, like, dollar cost averaging is great, but as the price keeps going up, you are dollar cost averaging your price up along
Yes.
with it.
Yeah.
So as the market recovers, I'm going to start scaling back my dollar cost average buys.
Mm-hmm.
I may still make some opportune moves here and there, but at some point, I'm going to scale it back so far that I just stop buying into the market and I just ride. Uh,
But at that point, I mean, you had this bot doing these purchases even while you sleep, which means you've still been participating in this market flow in general, which, as we say during this burble, it's like whether you buy a little bit up, a little bit down, it's like it's going to average out to a a decent point where we feel like we're at a low point still. So when it does go up, it'll still be a net win, because then you taper off your purchases as it starts to really rise. I'm hoping that you have to turn off the bot soon. That's what I'm hoping. But
well, I
yeah,
think I'm going to be making monthly investments in the crypto market. But when I say I'll ramp it down, I think it's more like as we start approaching the peaks that we saw in January. Once things are reaching their all-time highs again, then my investment will go to zero. So, and the opposite approach for this dollar cost averaging is going to happen on the next crash. Like, when we see the market start to tank again, I'm going to reactivate the bot and start making some real tentative small buys, because I won't know when we've hit the bottom.
it's like, okay, well, start buying in a little bit, because sometimes it's not a crash, it's just a dip, because there's dips and drives all year long,
Right.
and you never know what is going to be just a little dip, and then, oh no, some news comes out and it's a huge surge again. So if you buy in even a little bit at that tiny dip, you're still going to net win. So
Right.
yeah. And then if it dips big, you buy a little more.
The only key with micro, so I call it micro dollar cost averaging because you're buying such a stupid tiny amount,
Yeah.
$8 worth. The only key is you have to make sure that you're doing it in a way that incurs no fees. Because if you're getting a fee per transaction, I mean, that's stupid. That's going to add up quickly.
Yeah, I mean, unless you are doing one of those that they only collect a fee of whatever, it's 0.3%
Right. If
or
it's a
something like
straight
that, because then
percent,
it doesn't matter if you put in $100,000 or a dollar, you're doing the same thing. But you're right, if there's a flat fee of any sense, you could be getting railed on that.
yeah, and I guess maybe that's why it never occurred to me to do this because, I'm coming from the traditional stock market world where I'm paying $7 per trade to Scottrade. And
Hmm.
so you would never do micro dollar cost averaging in that world. But
No, that doesn't make
it's
sense.
it's a different reality in the crypto world. And with these APIs and the minimum buy levels, yeah, $8 trades all day, baby.
Yeah.
So let me wrap up. Think about dollar cost averaging, and you don't have to go total geek out and modify a bot or build a bot that like I
No, just
did.
borrow Keith's on GitHub and
Right,
use it.
right. But even that, look, there's a tech hurdle to getting that up and running.
Hmm.
So, but just think about spreading out your bets. I mean, if you just do that, I think you're giving yourself way more chances to avoid a bad position.
It seems like a smarter way to invest. So if people are planning to jump in, it's not a bad strategy to at least space out what you're doing. So all right, guys. Well, thank you very much for listening to our explanation of dollar cost averaging and varying your investments in the market. So again, this is Aaron Hedrick and Keith Mukai with Crypto Sanity. Be good and stay sane.